Good day, traders. Richard Jacobs here, and welcome to episode 9 for 2018 on our Underdog Trader Education channel. Can't believe it's the 9th episode already, and I've quite enjoyed making these recordings thus far and sharing some of the analysis of the markets and what we look at and how we look at it, and I hope you found some value in that as well. We're heading into a new trading week, so I thought I'd kick off perhaps with something a bit different by having a look at the top 40. But before we look at this daily chart of the top 40, which is what you're seeing up on your screens at the moment, let's flick up a time frame and have a look at this weekly chart, because I think this is something worth mentioning. We talk a lot about the volatility or lack thereof that we've seen in the markets over the past year or so. And it's really something that's been stretching back a bit longer than that. And one of the things people have asked me about is really, are we actually seeing some kind of a resolution or some kind of a change in market conditions? So I thought, let me pull up this weekly chart of the top 40, which is what is up on the screen at the moment, and share with you what we've seen here over the past few years. And this makes for quite interesting reading or analysis or digestion, because as you can see here, coming into 2014, before this we had this market in a really bullish uptrend, and as we came into 2014, we put in a higher high, we chopped around a bit, we put in a higher close, and then we really got stuck in this range. It's about a 9,000 point range, which is quite significant, so still very tradable, but a range nonetheless. And the markets have really just moved sideways since probably that high over there in April 2015. We get the sideways movement in the market, which is only now breaking to the upside. And especially in the past year, I think we've spoken about the lack of market volatility, and that can really be analyzed in this smaller blue block over here. So within this broader sideways range, we add even a more contained range over there, which is about, I can say it's about, 48, let's call it 48,600 to a low of 42,400. So about 6,000 points at its widest point. For most of the part, it was actually chugging along in an even narrower range, and really this has made trading conditions or trend continuation and trend following trading quite challenging over the past year or so. But the significance is really that we've not only seen a breakout in the past few months of this blue box over here, this blue range, we've also seen a breakout out of this wider range that's gone back all the way to 2014 and the market's broken to the upside, and that's really given us the not so much comfort but the indication that we're starting to see more trend, more range, and therefore greater trading opportunities for ourselves in this market as volatility ticks to the upside. So still, in the context of this weekly chart over here, a bullish market, as I suppose most markets would be over extended periods of time. Markets tend to the upside, so the market's pushing to the upside. We saw this retracement over here in December, and it's certainly continuing to the upside, and we're pushing towards those all-time highs that we've been eyeballing. So I thought I'd share that with you just briefly, so you can get some context for why it is that we look for extended average true ranges, extended volatility to base our trading on, and it gives an indication of the market condition or situation at the moment. Right, so let's jump back to our normal analysis and kick off with this daily chart of the top 40. And as you will recall, we've been analyzing this move to the downside and the subsequent retracement over here. And we said a couple of things. One was, if we saw the market push up into that zone above the 78.6, we'd be a bit wary about trying to necessarily go short over here. But as you can see, over the past few days, we've really been testing that level. Put in a couple of candles with long wicks over there. In this case, a bit of a long tail as well. So a lot of uncertainty. creeping into the market around these levels in terms of which direction the market participants want to take it. Friday closed slightly higher, so not much activity on Friday either, and put in a sense a bit of an inside day over there. So one of the things you'll recall that when we have those kinds of candles, what we're going to be doing in tomorrow's trading, that's Monday the 22nd of Jan, we're pretty much going to be reducing our trade size to the minimum, which at the moment is 0. So we'll send out communications on our WhatsApp group as per normal in terms of setups that do occur, but be aware that we are trade sizing at 0 for tomorrow as we wait for, I think, some kind of a resolution about which direction this market wants to go from here. Does it want to continue to the downside, or are we going to see this retracement continue into that zone, that danger zone, where we could potentially see the market pop to the upside? On the volatility front, on the daily basis, you can see we threatened or broke through that 50-period moving average over there, and now we sort of put in a bit of a continuation to the upside. So what we're looking for is for this to continue to push to the upside, so we can get those decent intraday trading opportunities, which correlate with to a large extent with what's happening on the average true range indicator that we use to analyze the markets. Indications of which way we're going to go, and this is where it becomes tricky. We got a lot of fundamental information floating around that sort of manifested to the tail end of Friday and into the weekend, and it's a question of how that's going to be impacting on our markets. As always, we technical we do with analysts, so the fundamentals will be what they are, and the real uncertainty lies in how the market responds to those. If you consider what's happening in the US government shutdown, will that even impact financial markets? That's what we're going to see. Nice indication of what we have is we got some weekend trading indices on IG markets, and that's sort of indicating that there could be some downside on global markets. Not much, 0.14 on the FTSE, 0.14 on the DAX, 0.28 on Wall Street. That's sort of broadly where the out of market trading is at the moment. That's downside that we're talking about. I think to a certain extent in South Africa, one of the things that we're closely looking at is the situation with the rand, with the news or I suppose allegations to a certain extent that the president may be stepping down at some unknown point in the future. There is an expectation that this will have a significant impact on the rand-dollar exchange rate, and obviously given the weighting of our rand hedge stocks in our top 40, that isn't expected to translate into top 40 movement. The question really is whether to a large extent those expectations have been priced into the market, or whether we see further rand strengthening as a result of once that the markets open and that news digests itself into the market. That's always going to be something that we need to have a look at and wait and see how the market responds. Suffice to say, there may be some variability and some choppiness as things open up and everybody tries to establish their positions in respect of those fundamentals. So we'll keep a sharp eye on that as well. If I drill down to what's happening on the intraday basis, so here we go, 15-minute chart of the top 40, and again I've just highlighted the let me just kill this February days for a second. I've just highlighted the intraday trading action for Friday in red over there, and you can see sort of just chopped along, didn't have much of a range. We sort of moved between 54 150s and 53 750, so a 400 point range. Nothing to get too excited about from an intraday trading perspective. Perhaps looking at it from a broader structural perspective, you'll recall one of the things we highlighted a few days ago was if we saw the market pull back and retrace into the skill zone over here, which lined up with this previous structure, and also lined up with this, and put the fibs back on, 61.8 retracement of this leg of the move over here, we could see the market find some support And yeah, I mean, it pulled into that zone, did a little bit of a bounce, pulled back into that zone, and then it did sort of, I wouldn't say push up to the upside, because it didn't push up exceptionally hard, but it sort of eked its way out of this zone, put in a little inside return over here, and looks to be pushing to the upside over there, although not convincingly so as yet. So bit of choppy trading action over there. If you did manage to get into a long position over here, you'd put your stops below, somewhere below this zone, based on whatever your stop loss methodology you use as part of your trading rules. Maybe we'll get a bit into that in a later video, in terms of how do you set stops, what kind of indicators can you use, etc. But then you'd probably still be long this position. On our side, we actually have an over weekend long position, based on our intraday trading system, and as I said, it's going to be interesting to see how the market open impacts on that as we go into the new week. In terms of our performance over the past week, it's a bit of a flat performance really. On a standard basis, we're up 33 points. We started there at a dip, pushed to the upside, so really just chopped along, put in a small 33 point gain, as I said. On a weighted basis, only slightly better. Again, we had that big dip over there, but we quickly recovered, and I think, let's have a look, 95 points up on a weighted basis, so still in a decent position for the year to date. Up 215 points on a standard weighting, so in other words, that's if you weighted your trades on an equal basis, didn't differentiate trade size. And using our dynamic sizing system, we're up 1,278 points for the year. So that's really just weighting our trades on those A days, on those days that we expect trend to really manifest itself more. So that system is working well, and that's reflected in the differential between these two levels of a year, something like 1,000 points of upside in terms of weighting our higher probability trades. Overall, fairly standard on the most part, 41% win rate. The 3.25 to 1 is anomalous. It's very high as an average win to average loss ratio, and it's, I suppose, to a certain extent impacted by one big trade that we had on the 3rd of Jan, but also the fact that the weighting differential is so big. So by weighting our trades on those training days and having good positive trades on those training days, we've actually achieved a great reward to risk thus far, although the sample is quite small. What is interesting and worth mentioning is the number of trades. One of the things we did coming into 2018 was to, and I think I mentioned it in our first recording for the year, was to make some refinements to our intraday trading system. And one aspect of that, or one result of that, which we anticipated, was an increase in the frequency of trades. So interesting to see that on the 21st, or up until the 21st of January, we've already done 32 trades, versus 269 in the whole of 2017. So we are actually projecting quite a high volume of trades for the year, and that's going to be interesting and exciting to see for us, because as long as we are generating positive expectancy in terms of our trades, in other words, we win more than we lose when we enter, and we win at a frequency sufficient enough to justify profitability, then spending more time in the market is going to be really profitable for us as traders. So that's something that's quite exciting at the moment. In terms of the equity curve itself, as you can see, it's just sort of, we pop to the upside. There's that big trade that I mentioned, and then we sort of chugged along sideways for the most part. So we'll be looking for some upside hopefully in the week ahead. Looking at the week ahead, some more, the two things I did say would potentially impact on us. Let's have a look at the firstly the S&P. The 4-hour chart on the S&P looking very bullish at the moment, pushing to the upside all the way over here, putting higher highs and higher closes. We'd highlighted this potential double top over here. And this is important and worth discussing in a bit more detail, because a lot of traders, when you see this formation starting out, you get the market pushing into a high, retraces, pushes up, retests the high, and rejects it. As soon as this happens, people start getting short, and really a double top only confirms once you get a break of that midpoint over there. And clearly this didn't confirm, so you got probably a bunch of people trying to get on board a short trade early on, and then they would have gotten squeezed as the market pushed to the upside and put in that higher close. So again, it comes back to that point about you want to try and, while there is definitely an element of being predictive in terms of market activity, you also want the market to guide you. Don't try and preempt what the market should or will do. Let the market do what it's going to do, and then respond accordingly in terms of your trading. If the market does A, then we do B. So this is probably a nice example of that on the S&P as it pushes to the upside. As I said, looking at that out of market analysis, there does look to be a bit of downside, short-term downside on the cards, and whether that's related to the US government shutdown or not, we're not sure. But that's certainly something to keep an eye on if we see some short-term consolidation starting to creep in. Just looking at the structure of the charts, I'd actually have expected a bit more upside once we break this level over here before we see any form of retracement. Contrast that to the other key element, which is the Rand-dollar exchange rate. And there we recall that range that we got ourselves bound into for most of the year. We broke out of it. What's actually fairly classic to a certain extent here, and let me just draw this in properly so we can actually see it. That's the range. Oh, sorry, that's probably a better indication of the range over there. It goes back all the way there, but I'm not going to bother to draw that. Market eventually broke out of this on Thursday, and then we saw this retracement back up into that breakout level, and now what we're seeing is a potential continuation to the downside. That would play into the hands of those who are looking at the fundamental news in terms of the potential recall of the president as being Rand positive or Rand bullish, and we could then see a further strengthening of the currency in this continuation wave, and this continuation wave playing out over here. That we'll probably get some feel for later this evening. It's about 8:30 p.m. on Sunday the 21st, as I'm recording now. Later this evening we'll get the currency market starting to open, and we'll start getting a feeling for which way the Rand wants to move here going into the new week. But certainly if it does put in that continuation move to the downside, that'll add further pressure to the top 40, or that should add further pressure to the top 40 via the impact on the pricing of the Rand hedge stock. So we could see some consolidation or downside playing out in the markets, at least early on. So excuse me, still got that bit of a bug. So that's what's happening on the markets at the moment. I hope you guys find that useful and something you can build into your own analysis, some ideas and thoughts around the market condition that you can build into your own analysis as you go into the next trading week. Then the other thing we generally have a look at is our offshore challenge. I'll try not to repeat myself too much on this one, but just broader, maybe I'll do it on a weekly basis. Broadly, that is, we've got a £10,000 challenge that we're trading a basket of currency pairs, a couple of indices, or one index being the US S&P, and as well as the gold and oil commodity markets, and really trading those those instruments on a rolling basis to try and generate positive expectancy for the year. Where we at the moment, let's pull that up. On the closed positions, on a net basis, we're about £124. That's 1.24%. So a bit of a modest return, but not too bad for 21 days into January return for the year. I'll run through the positions that we that changed since our last recording, as well as the open positions, which are highlighted in blue over here. Let's actually kick off with this oil one, where we took a bit of a bath. We lost 95 pounds, which is quite significant in the context of our average win size and loss sizes, and actually pushed our reward to risk down quite significantly. At the moment, our average win is £64.50, our average loss is £36.56, and we're running at a 41% win rate with 11 winners out of 27. That's not too bad. Expected value still remains positive, but as I said, we took a bit of a bath on that oil trade. So let's have a look at what went into that thinking and how it all played out. Let's put up the oil chart. There we go. So what happened here was we had the market pushing up, putting in higher highs and higher closes. We waited for a retracement back into structure. It actually pulled back quite deeply over here, retested the bottom of this range, but didn't break and close below it, and then it looked to be pushing to the upside. We got involved to the long side, pushed up a little bit further, and then just rolled over to the downside and tapped us out. We've actually technically broken structure to the downside now, so our long trades are a bit off the table, and we'll keep an eye on whether we see some kind of retracement playing out. Sorry, worth mentioning also is you've actually got a head and shoulders confirming over here, left shoulder, head, right shoulder, there's the break. So technically you could look for a short position over here, put your stops in above the swing high, and if you do that, you would have projected downside probably towards around about those levels over there, although that swing low there could provide resistance. So you might want to aim for around about the 67.20 levels sorry, for a potential downside move if that was one of the formations that is in your trading toolbox. So as I said, we took a bit of a hit on that one. The other one positive, the Euro USD, excuse me, this one was actually looking much more positive, so a bit unfortunate that it didn't follow through. We eked out a small gain on it. Let's just pull that up. Here we go. Market had pushed up quite nicely, put in a retracement. We got long, pushed to the upside, and it looked like it was pushing towards our target levels over there, and then we just had a bit of a roll over. We used the trailing stop, and that's why we stopped out on this bearish looking candle over here, as I said, for a small rather modest gain, but we'll take each gain. And one of the things I've always reiterated, no single trade is going to define which way this particular trading setup and trading system and structure that we've got going is going to go. If I look at the other one, we also eked out a small loss. That was the Euro Swiss franc. Where is she? There we go. Euro franc. Okay, a couple of things to mention here. We're actually in a new trade on Euro franc as well, but originally the trade that we stopped out on was this one over here, when market had pushed to the upside, then put in a retracement back down here. Let me just zoom out so it's clearer what's happening over here. Ignore that for a moment. Market had pushed to the upside, retrace. We actually got long after this bullish looking candle over here. And the market pushed further to the downside, put in a deeper retracement all the way down, and then we caught some buying activity, and we got long again of this candle. And at the moment, on our open position or open version of this, we've actually pushed to the upside, and we quite nicely in profit, and it's looking quite bullish at the moment. So that's the euro, that's the one we stopped out on, where we lost about £18, and this is the one that remains open over there. Our other open positions are USD CAD. So this is USD versus the Canadian dollar. It's a long position which is also in profit at the moment. What happened there was the market had pushed to the upside, put in this little break of this previous structure over here. We waited for the retracement back down. Got involved early on, actually got stopped out I think last week sometime. Got another buy signal, so we got long, chopped along sideways, and now it looks to be pushing up quite nicely. So again, hopefully this is one that can just push to the upside in the new week. Gold is our other open position. It's a long position in gold. To a certain extent, early days. What's happened over here? Market pushes to the upside, puts in this complex retracement to the downside, pulls back all the way between the more or less into where the 50% retracement level would be. We got involved as it pushed to the upside. It's pushed up a bit. It's putting in a bit of a retracement at the moment. If we do see some equity market weakness, that could perhaps translate into some bullishness on the gold price. So we'll bear that in mind as well. We've actually rolled our stops a little bit up to this 1326.8 level over here. So we've reduced the extent of this risk. At the moment we're risking £47 to make 132. So that's more or less comfortable position to be in. If it does push to the downside, we won't lose that much, but our upside potential is pretty decent. Right, what else we got? We got Euro Japan. This is a short position. This is the one we've been trying all year to try and get right. Market pushed to the downside, retraced. Remember, we got short a couple of weeks or a week ago, got stopped out, got short again, got stopped out. Then we got into this complex retracement scenario. It pushed all the way back into that 78.6 zone. Then it pushed down, put in this bearish candle, closed outside of the 78.6. So we got short again. We did get one nice leg down over here to put us into a profitable position. There's some consolidation and retracement happening over here on the 4 hour, but it's still positive. If we do get another leg down here, it would be great, because then we could roll stops and effectively de-risk this trade. So certainly something that we're going to be looking at the moment. Also a decent target reward to risk on the cards. Let me just get my numbers right over here. We are risking 47 to make 172, so that's a nice position to be in as well. I think we've covered most of them. Did we do USD Japan? My short-term memory is completely bust. Let's have a look anyway. Yeah, we did that. Okay, I think we covered all of our open positions over there. Nothing specific on our radar at the moment, but it does look like a lot of the, quite a few pairs, and it's worth working through the charts, are looking to start or in the middle of retracements, which could confirm in the next day or so, which could open up potential trading opportunities in the direction of the individual trends. So that's certainly something we're going to be keeping an eye on as well. So guys, that's it for this recording. As I said, I hope you guys find it useful. Feel free to drop a comment, a like or dislike, as it may be, on the video, and all the best for your trading this week. Cheers.